So before we get to your questions, there are a few issues we just want to get out of the way. The DG touched on it during his presentation, but we just want to emphasize these few issues. Yeah, the first one is to do with the mutual evaluation, which is coming through next year. So DG, we just want to get a brief overview of why this is important, and most importantly, what we need to do as supervisors and reporting entities.
Okay, yes, thank you, Kuda. So, in terms of the upcoming mutual evaluation process that I said will start in 2026 for Zimbabwe, in fact, it's starting this year because there are other countries that are already being assessed. But Zimbabwe will come in at number 3, so it will be assessed starting 2026 February. What is really very important is for all stakeholders across the entire anti-money laundering value chain to be able to demonstrate that they have a good understanding of, firstly, their money laundering risks, money laundering and terrorism financing risks, and then also to demonstrate that they are effectively implementing those obligations. And key among those obligations, like I said, having a good understanding of the risks, identifying suspicious transaction reports, and then filing them and with the FIU. Then, like I indicated, obviously, Zimbabwe, when it was previously assessed back in 2015, with the report coming out in 2016, the country ended up being placed on the grey list, FATF grey list of countries that are deemed to be insufficiently compliant. So it's a consequence that we want to avoid at all costs at this stage. So you'll find that over the last few years up to now, we have been increasing and intensifying our AML CFT compliance activities. And one of the areas that was lacking, obviously, and which is considered a very important compliance tool, is that area of sanctions. So it is very important that each and every one of you who have AML safety obligations carry out your obligations in full, and so that ahead of those evaluations, we are not found wanting as a country and we don't end up being placed on the grey list.
Great, thank you, DG. Then last year, we had our NRA, National Risk Assessment. This was our 3rd iteration. Maybe if you can just give us a brief update of where we are as far as the National Risk Assessment is concerned, because it's a key component ahead of the mutual evaluation.
Yes, yeah, thank you once again, Kuda. So yes, as in my presentation, remember I indicated that the risk, everything has to be implemented. All the anti-money laundering obligations have to be implemented in the context of risk. And so the risk-based approach is emphasized. Like I said, when we are visiting entities, the first thing that we want to understand is whether you have carried out a risk assessment. The same applies at national level. Countries are required to carry out money laundering and terrorism financing risk assessment at national level. And as Zimbabwe, we did what was then our 3rd national risk assessment since 2014 when we did the first. We did the first one in 2014, completing it in 2015, becoming only the 3rd country in Africa at that stage to actually carry out a money laundering and terrorism financing risk assessment. And now that we are on our 3rd cycle, I'm not sure, I don't think there's any country that has gone beyond in Africa that has gone beyond the 3rd risk assessment. So we commenced the risk assessment in November 2023, and we completed the process in November 2024. when the risk assessment results were adopted first by our National Task Force on Anti-Money Laundering, which is the operational coordination organ. But it was also then adopted by the National Anti-Money Laundering Advisory Committee, which is the upper body that is responsible for MLCFT policy coordination and advising the minister. So that was done in the course of November and December, and actually through to early January, when the National Anti-Money Laundering Advisory Committee adopted the report by round robin. So the next step now for that National Risk Assessment report is now going to the minister. It was just going through some quality control in terms of the editorial issues, not necessarily the results. And now that process is almost done. We expect the minister to receive it in the course of next week. The expectation is that when the minister receives it, he will take it at the next available opportunity before cabinet, so that it is adopted as a national document by cabinet. This will also help with high-level political buy-in at that level. Once we have sent it to the minister, we'll also start sharing the results of the National Risk Assessment with all relevant stakeholders, including all of you who are gathered in the webinar. We'll send out a package to financial institutions, because in the entire report, there are areas that the different entities have to focus on. There are areas for banks, there are areas for estate agents, there are areas for casinos, for lawyers, for accountants. So we are now packaging the report in such a way that it speaks to each and every one of the different entities, but also to regulatory bodies as well. There is also areas for them, law enforcement agencies. So we'll package the results of the risk assessment so that it speaks to each of the different stakeholders, so that we send it out. Should expect that to happen towards the end of this month and early March. That's when we'll be disseminating that report. But when you receive it, it will give you a good picture of where we stand as a country in terms of where do our money laundering risks lie. And also, when you do your own risk assessment at institutional level, at business level, the bigger picture at national level gives you the guidance as to which areas to focus on.
Great. Thank you, DG, for that. So reporting entities, I think we'll be reaching out to you as far as dissemination of the NRA is concerned during this year. So we'll now go to your questions in the chat box. If you have any question, please feel free to drop it in the chat box, or you can just raise your hand at some point to then unmute you so that you can ask your question. So the first question is coming from Comfort Muzazi. Comfort is asking, if the law is yet to be finalized, was the implementation not supposed to wait until the regulator had in place sufficient provisions? I'm not quite sure, Comfort, which law is yet to be finalized. Maybe if you can clarify, then we'll come back to your question later on which law you are making reference to, which is not yet finalized. Then Brenda, yes, we are going to share the slides with you after the webinar. Then Tabisi, you have a question. The question is, are the 28 infringements attracting potentially the same penalties, or they're tiered, or there's a tier system of some sort? Did you not sure if you want to come in?
Mm-hmm. Yeah, let me start by even Comfort's question. I think I understand where he's coming from, because in my presentation I had said we don't have an appeal mechanism. I'm sure that's what he may have been referring to. If not, then he can clarify why the law could not have been waived. I can't say the law is not complete as it is. You'll see quite many provisions that are provide for administrative penalties under different regimes that do not necessarily provide an appeal framework. In cases where there is no appeal framework, our justice system, our legal system provides other mechanisms for recourse. I forget offhand the name of the statute. I think it's Administrative Justice Act something that gives recourse to anyone who is aggrieved by any decision that has been taken by an administrative body. He can actually submit the decision for review to the administrative court. But also, we all know, even the High Court, or those of you who are lawyers, the High Court also has inherent powers to review any of the decisions that would have been made by the FIU. That has not happened in the past, but it is just my feeling that we need to provide some appeal mechanism that is specific to that, to the Money Laundering and Process of Crime Act, rather than fall back on the provisions or administrative justice provisions. But I wouldn't say there is a gap. There is no gap, but it's just an improvement that we want to make sure that those provisions also come out clearly in the Money Laundering and Process of Crime Act. Then the 250,000, yes, again, the law as it is currently couched, it imposes the maximum penalty. It sets out the maximum penalty and then gives the regulator leeway to weigh the seriousness of each violation. In practice, you will find that some violations we impose fines as low as $2,000, even if the maximum is $250,000. It gives us that wide leeway to sort of impose an appropriate penalty for not only for each violation, but also for each entity. Some small entities, for example, the same violation committed by a big bank and then also committed by a casino or a one-man precious stone dealer, will not necessarily attract the same penalty, even if the violation is the same. We'll also look at the financial capacity of each institution to pay, just the same way as the courts look at that as well. So we'll find that even with criminal sanctions for money laundering, the maximum period of imprisonment is 25 years, but the provisions don't put in a tired approach to say if it is like this, give 6 months, if it is like this, give 1 year. That is left up to the courts to assess the totality of the circumstances and come up with a penalty that is appropriate for that time. So it goes without saying that the maximum of 250,000 will reserve it for what you feel is probably the most serious of violation, and also probably where the entity involved also is also a very big entity that has a big impact on the financial landscape.
Great. Thank you, DG. I think we'll move on. There's a question from Hazel here where she's requesting us to go through the breaches one by one so that they're clearly understood. So I think in the interest of time, we won't be able to do that here, but your supervisors, obviously, during their training sessions with yourselves, they'll be able to take you through all those 28 infringements where they can explain the implication and what they mean. So your supervisors will reach out to you and then they'll be able to explain. So there are questions also that will be coming through where people will be saying, yes, you have this requirement for you to impose these sanctions, but in practice, has this been done? Has FIU and the other supervisors actually imposed sanctions on non-compliant entities? And also, as we heard today, this is also applicable to individuals.
Okay, true, Kuda. The provisions, the administrative penalty provisions have been implemented over the years because these came into place around 2013. But like I said earlier on, in the earlier years of the law coming into effect, we were focusing largely on trying to make sure everyone understood their obligations. So at that stage, we were not really imposing penalties to any great extent. But of late, over the last 2 or so years, we have had increasing incidents of the penalties that we have imposed. I think maybe I like the question that has been raised. Maybe it's statistics that we should also share so that the entities, it's clear to the entities that these are real penalties that are being imposed in the real world. A few banks have been, over the last 2 years, I don't have the statistics in front of me, but over the last 2 years, probably about 2 or 3 banks have been fined. But the majority of fines have tended to be imposed on designated non-financial business professions. I think dozens of fines have to date been issued to various estate agents, firms. Some fines have been issued to accounting firms. So as and when we do some inspections, those and serious violations are found, there will be penalties imposed. Only yesterday, I signed penalty letters for a number of precious stone and precious metal dealers. So if they are listening and they haven't received their fines, I'm sure it's in the posts. It's coming through. So the fines are being imposed. For a start, the fines were mostly being imposed by the FIU, but we have started to encourage the competent supervisory authorities as well to start imposing those fines, because there was a time when the FIU was the main supervisor of everyone, but now we are delegating powers more and more to the various competent supervisory authorities and self-regulatory bodies. And I would need to check their statistics to see if they started imposing the fines following the inspections that they carry out. I want to think a few have started to do so, but I think in due course, it's something that is very important for us to share the statistics, to say we may not give you at this stage. Maybe in future we'll actually consider actually listing, because in other countries it comes out as public information. Such and such a bank has been fined, such and such an entity has been fined. For a start, we didn't really want to scare entities. We wanted to give you that leeway. But in future, we may start actually publishing even the names as and when we impose penalties and post it on the website for transparency purposes. But we had wanted not to do that at the beginning, so that at least we give you an incentive to comply first, so that you avoid that public naming and shaming. But going forward, you probably have been given sufficient notice now. We may have to name and shame those. But at this stage, what we can only share, if I had them, are the statistics as to how many state agents have been fined, how many banks have been fined. Those we have in our records. So I will ask my team to share those, so that along with the presentations or after the presentations have been shared.
Yeah. Thank you, DG. I think in your response, you've also answered 2 questions that came through from Everson Gatsi and Michael Jacob, where they were asking if the FIU and the supervisor are going to make public the sanctions they've imposed on non-compliant entities. So I think it's clear that this is going to take place at some point. And it also addresses, remember earlier on, the DG mentioned that our sanctions regime should be effective, dissuasive, and proportionate. So the dissuasive is part of it. If we publish, it will make sure that the sanctions are dissuasive, not only on the entity, but others as well, to dissuade others from being non-compliant. So it's coming. Thanks, DJ, for that. We'll try to unmute a participant who has his or her hand up. Let's try to see if we can allow the mic. So Colin, if you are still on the line, we have allowed your mic. You can ask your question. Okay, so whilst we are trying to get Colin to ask his question. We can take other questions as well. Yeah, so we've been using a lot of acronyms in here. Apologies for that. There's a question that is saying, what are DNFBPs? In I'm happy the team has responded. So DNFBPs refer to designated non-financial businesses and professions. Then there's a question from Claudia Stigi. He's asking, we were removed from the grey list. I think it was in 2022. What did we do to be removed, or what did we do as Zimbabwe to get removed from the grey list?
Yes, thank you. So when we were put on the grey list in 2019, officially, we were given an action plan, list of the items that needed to be addressed, what were called key and strategic deficiencies. It was not everything that was deficient in our AML safety system, but a few key things, a number of key things were highlighted, one of which was to put in place a risk-based supervision framework, a risk-based anti-money laundering and counter-financing of terrorism supervision framework. So this is where you come in as designated non-financial businesses and professions and financial institutions. The fact that we are sitting here with 700 and over 700 participants shows the long way through which that framework, risk-based supervision framework, has brought together the different supervisors and the entities working together. So we now have a fairly strong risk-based supervision framework where each and every one of the different supervisors, especially in the financial sectors, are now carrying out on-site inspections of their supervised entities, identifying deficiencies and coming up with corrective action plans. So that was one thing that we put in place, that risk-based supervision framework. And that also actually one of the action items that was there was actually to put in place that framework for imposing dissuasive, deterrent, and proportionate sanctions. So when we were removed, we were able to demonstrate at that time that we'd now started to impose deterrent sanctions for violations. I can't think of any. I think the other thing was in terms of risk assessment, which I've also said is very important. One of the action items was to make sure that as a country, we have a coordinated and shared understanding of our money laundering risks. And again, I think this is one of our strong areas that we have improved on. So the requirement was that we should continuously update our risk assessments. And when we do, we should share with all the relevant stakeholders the results of the risk assessment and educate them, which is something that we have been doing over the years. During the period that we were under the grey list, we did quite a lot of work to disseminate the results of the second risk assessment that was completed in 2020. And so that led again to us being able to discharge one of the action items on the action plan and getting us removed. So in short, we carried out a number of steps to strengthen our AML CFT regime to the satisfaction of the Financial Action Task Force. Another key one that I did not mention is in relation to having in place a system for collecting, maintaining, and accessing beneficial ownership information. It is one of the key AML safety requirements that as a country, we must have a framework by which we are able to identify beneficial owners of companies, of trusts, and then to make sure that that information is available to the relevant stakeholders, including law enforcement agencies, FIU, financial institutions, etc. So we also were able to demonstrate that we had put in place such a framework. Yes, it's not yet fully refined because at the moment there's some work that still needs to be done at the company's registry in terms of making sure that the information is computerized and is easily accessible. But that's AML safety implementation is not an event, it's a process, it's continuous improvement.
Great. Thank you, DG. We also have a question from Taro Nyoni. She's asking, are real estate agents required to lodge suspicious transaction reports? If so, then to whom? Asking for a new realtor.
Yeah, a good question. If you are an estate agent and you are not yet aware where to lodge suspicious transaction reports, the FIU may be on its way. But no, we don't use the training sessions for that. But yes, all suspicious transaction reports. Well, okay, for the first, you said real estate agents are required or obligated to submit suspicious transaction reports. The answer is yes. All designated non-financial business or professions that I listed in my presentation, estate agents, accountants, casinos, car dealers, trust and corporate service providers, precious stone dealers, and then all the financial institutions that I listed, they are all required to submit their suspicious transaction reports to the FIU, not to your primary regulator, not at all. But that is very important to the FIU. And so there are some templates that are there for the submission, and I would encourage you to reach out to our teams at the end of the presentation so that they are able to get you registered to the platform that is used to submit suspicious transaction reports. In fact, we have started to receive suspicious transaction reports from estate agents. Over the years, we were not getting any. In fact, most countries struggle with DNFBPs in particular, who don't report suspicious transaction. But as Zimbabwe, we think we are making headway more than most of our peers in the region, as we are beginning to see some DNFBPs submitting suspicious transaction reports. We want that to increase, and we think that will place us in good stead when we are assessed in 2026.
Great. Thank you, DG. So I think linked to that, there's an infringement number 21 is failure to report a suspicious transaction. And you have indicated that there are some sectors that are doing well, but we also have a couple of laggards. So I don't know what message you have for the audience as far as this is concerned in terms of identifying those entities that are not reporting suspicious transactions and the action that can be taken by supervisors and the FIU to identify these non-compliant entities, and then the action that will be taken.
We are really intensifying our supervisory activities. The FIU, along with the different supervisory authorities, to check all those instances of non-compliance. So like I said, we are having an increasing number of entities that are being penalized. So should you be visited and it's found that you are not identifying suspicious transaction reports, among other obligations, chances are you are going to be fined in the course of 2025. Like I said, some inspections have already been done, so, and some fines are already being issued, but it's an ongoing process. So my advice to those that are not yet submitting suspicious transactions or implementing any other of the key obligations is to start doing so. If you don't know where to start, the first port of call is your supervisory body that will give you guidance. But again, the FIU as the overall, because the FIU sits atop as the overall regulator, AML safety regulator. So we are also there to engage with you where you feel you need our help.
Great. Then we have a question from Claudius, who is asking if actuarial firms are covered under non-bank financial institutions with respect to compliance with AML safety regulations, or they're excluded. So for actuarial firms, so we basically have professions, then we also have businesses. So actuarial firms is not one of the professions that is covered. So we have real estate agents, we have accountants, we also have lawyers, we also have trust and company service providers. Then as far as financial institutions and business are concerned, for your sector, we are mostly focusing on life insurance companies. So actuarial firms will not be be in scope. Then some of the questions, I noticed that they've been responded by our team, so I will not get to those questions. Then Digi, there's a question here that has received 3 thumbs up. So it looks like it's quite popular. It's a question from Ngoni. He's asking, our official currency is ZIG. Why are our penalties in US dollar? Then I'll give you a second question as well from Arnold, who is asking, is the 7 days given to entities to respond 7 business days or just a week? Maybe if you can respond to those 2 questions.
So it's 7 business days. I will have to cross check that to be absolutely sure, but my understanding is 7 business days. That is what is given, and there is leeway if there is justification for the entity to seek an extension if it's justified, and we can extend further if there is justification that has been given. Maybe there is some more evidence that you want to gather. As for the penalties, why they are set in US dollars, they were set at a time when we were using the US dollar currency. So I agree with you that maybe now that ZIG is our main currency, probably we may need to amend. We had not seen the need to amend, but I get it. From an optics perspective, it is always good for us to put our currency in front of other currencies, and so we will look into amending so that the penalties are expressed in local currency. But be that as it may, even now where they're expressed in US dollars, still you are allowed. When we actually impose the penalty, we still, yes, have been imposing them in US dollars because there have been fluctuations in our local currency over the last few years, and we are happy that we are seeing it firming up. So we wanted to also to avoid the situation where we change the penalties every now and again. Now with the stability, I think we can confidently start setting those fines in ZIG. But like I said, even the fines that we are imposing now, while we peg them in US dollars, we always then state that or equivalent in local currency or any other currency that is still legal tender in the country. So you can even pay in rand as well.
Great. Thank you, DG. And looks like there are some people who closely monitor the developments this side as FIU. So there's a question here about our admission into the Egmond group. So they just want an explanation as the difference between our admission in the Egmond group and our membership in ESAM. Like, what are those differences?
Okay, so in terms of, so as a country, we are a member of the Eastern and Southern Africa Anti-Money Laundering Group. The government committed itself. In fact, Zimbabwe was one of the 7 founding countries of SAMLAG. So we committed ourselves to implementing the international best practices and standards on anti-money laundering. So membership of SAMLAG is country-based. Then there are many other organizations in the world that are institutional-based. So Egmond is, as a country, we can't join Egmond as a country, but FIUs, it's a grouping of financial intelligence units the world over, where they come together to share intelligence and also to share best practices in terms of combating money laundering, but largely to also share intelligence. As we know, crimes knows no borders, and it is a platform that has really enhanced the way in which the Zimbabwean FIU cooperates with other FIUs. When we want information from another country, as you know, Zimbabwe has a big diaspora population. We have a lot of our citizens who are in different countries and then who still have economic ties, so we still have transactions that come across that we need to investigate in other jurisdictions. So in short, SAMLAG, it's Zimbabwe, which is a member. Egmont is the Zimbabwe FIU as an entity, which is a member.
Great. Thank you, DG. So we have a few minutes left, so we'll try to go through the few questions that we have in the chat box. So if you have any question, please post it now. Otherwise, we'll be ending the webinar shortly. We have a question from Lamek Mbimbi. He's asking, what is the attitude of the FIU regarding transparency where a financial institution approaches the regulator and self-reports possible breaches of the Act? For example, the FI discovers that due to a system malfunction, they could not report STRs within the prescribed timelines or possible deficiencies related to CDD or ongoing due diligence.
So I like it, Lamek, that you are, I hope you are not confessing something in front of the big group, but I'm taking that as a hypothetical question. Yes, we have had actually instances like that where financial institutions, a number of them, a couple of them have come to us and said, no, we're supposed to, because you are supposed to report a suspicious transaction promptly, or in any case, not later than 72 hours when you are really, really late. And then instances come across where the institution, because banks in particular use IT tools to monitor this. So sometimes a time lag can happen between the time when or maybe due to some hitches, like you have correctly said, you may pick the suspicious transaction a little bit later on. So our attitude has been, we take that as mitigatory, really. And we would normally look kindly at someone who comes directly to report to us. But if we discover that it's a very serious, it was a very serious sort of breach, even that failure that to put in place systems that are efficient, we may penalize you, but we may take the reporting as mitigatory. I am glad to say of those entities that have come to report to us voluntarily, we have not seen it fit to fine them. But that is not to say that we may not fine in future if there was some serious consequences that arose from that failure.
Great. Then there's a question here from Brian. He's asking if once an entity has been sanctioned and an amount has been given to the entity, is there a payment plan that can be agreed on, and or a payment period to pay the fine stipulated by the regulator? Then also linked to that, DG, maybe if you can touch on instances where an entity that has been penalized and does not go on to pay that financial penalty. I know you touched on it during your presentation. Maybe if you can just repeat on the what we can do as FIU or supervisors, what they can do in that respect.
So the first part of the question was?
Can there be a payment plan?
Yeah. Okay. Yes, so normally when we impose the fine, it's immediately due and payable immediately. But if the institution asks for a payment plan, we consider the payment plan and would normally, depending on the level of the fine and the circumstances of the entity, if we understand these financial circumstances, we may give a payment plan of up to 3 months, but it's not automatic. If the fine is small sometimes and we are satisfied that the entity can afford it, we normally just give you 7 days within which to pay the fine. It's just 7 days to put in place your administrative steps to make sure you pay the fine. But yes, if you make a request and it can be justified for a payment plan, we'll consider it on its own merits and see if it is justified, and we can actually give an extension. But again, like I said, it's automatic, and sometimes we refuse that payment plan. When we are satisfied, you can pay. Then what happens if the entity does not pay? Yes, Section 6 of the Money Laundering and Process of Crime Act, we said these sanctions are set out under Section 5, but Section 6 then goes on to give a mechanism by which the FIU can recover the fine. And it says we can register the penalty order with the court, with the registrar of the local court within which the entity is situated. And then it becomes, once it's registered, it becomes, it's deemed to be a civil judgment in favor of the FIU against the entity in which it is, against which it is registered. Then we can execute that as a civil judgment against the property of the entity. But also remember, for every day on which you don't pay the fine, we can actually couch the penalty in such a way that past the deadline, $500 accrues for every day that you don't pay the fine. So it will normally be in the best interests of the entity to pay the fine as within the deadline that has been given. But yes, in short, it can be registered as a civil, it becomes a civil debt against the institution, and we can execute through the messenger of court or the sheriff of the High Court.
Well noted. Thank you, DG. Then we have a question from Eunice. I'm not sure if we need a separate webinar for this. It's quite loaded. I'll read the question. The outstanding work on the system for beneficial ownership, is this likely to be completed by the time of the mutual evaluation in 2026? Are there any gaps? Then probably the second question, are there any gaps in the national AMO framework that have been identified through the recent NRA, and are they being addressed?
Yes, so thank you. The first part, sorry, can you come again, assist me Kuda, with the first part? It's
yeah, it's to do with the bill.
Oh yes, yes. Well, a lot of work has been done. My understanding, I am hazarding speaking on behalf of the Registrar of Companies, but the last time we engaged with his office, we got an impression that the system itself is now in place, the IT system that will allow companies to re-register there, because even companies that were previously registered, there will be a requirement for the companies. I think that is the next big step, to require companies to re-register on the platform so that they put all their information there. So I think what needs to be done, what we are engaging with the Minister of Justice, is to issue a new statutory instrument that mandates companies to register and give them a deadline. To us, that is going to be the trigger for making sure that that information is now loaded onto the platform. The companies that don't register by a particular date run the risk of being deregistered and then being sanctioned as well. But what I want to say is, you as reporting entities, as financial institutions, and as DNFBPs, because the international standards say a centralized company registry is one mechanism by which we can maintain beneficial ownership information. The second mechanism is for the financial institutions and DNFBPs, when they establish business relationships with their clients, they are required to undertake customer due diligence, and one of those key requirements is to obtain beneficial ownership information. So as Zimbabwe, one of the mechanisms we rely on, if we can't get the information at the company registry, we should be able to come to you to say, oh, so and so is your client, can you give us the beneficial ownership information? If you don't have it, you run the risk of being penalized, because you must get that information from the client itself at the end of the day. Banks, most banks are doing it already, but DNFBPs are also beginning to do it, but quite a number of them are not doing it. So let's say we didn't have a centralized companies registry. We should still have that mechanism to fall back on, where we can come to you as the financial institutions, as the designated non-financial businesses or professions, to ask you, can you give us the full beneficial ownership information of all your clients, or of this or that client?
Great. Thank you, DG. And the second question was to do with the gaps that could have been identified during the NRA.
Yes.
Yeah.
So since we have not yet published the NRA, yes, some gaps have been identified. Is something that we are going to share with you when we package the NRA results appropriately. So this is something that I said probably starting end of this month, February, in a couple of weeks' time, and through the beginning of March, we should start sharing those. We'll also put the relevant parts of the report on our website as well for wider reach, but we'll also actually send relevant extracts and packages to the different institutions. So yes, the gaps are there. Maybe one of them, which I can be very happy to share with you, is the fact that we have identified some moderate risk in relation to the use of virtual assets in the country. And one of the recommendations we are going to make to government is that a law be put in place to subject virtual asset service providers to anti-money laundering regulations. So it's something that we are hopeful the minister and the government will take up and agree to, so that we can regulate the virtual asset service providers. So there's a legal gap there, and then so that we can appropriately supervise them and manage the risk. But the rest of the deficiencies, you should be able to receive them when we start our dissemination outreach to stakeholders towards the end of this month.
Great. Thank you, DG. I know the questions are a bit of a mixed bag, but it's a good opportunity to address some of these pertinent issues. So there's a question here from Komanzi on the sanctions framework. So it's asking, when responding to an intention to impose a fine, but let's just say impose a penalty, can undertakings made by a reporting entity, for example, to make changes within set timelines, lead to the fine or penalty being suspended pending fulfillment of those undertakings?
No, in Shona hanzi kuseri kwegova hakuna muteuro. So it normally applies as well to that. Because if we reach a stage where we have to fine you, we would have considered the breaches to be, it's not every breach that we fine. Most breaches really, what we tend to do is to actually issue a corrective order to say, okay, we have noticed we have weaknesses here, can you address them? So, but once we have chosen that these are serious violations, it can actually be an STR that you had not submitted, but which you have eventually submitted. We can still fine you even if you have now submitted it beyond time, because we felt that it was of such a serious nature, it should have been submitted on time. It can be mitigatory. It can actually, it will not necessarily lead to the suspension of the fine, but it may lead to probably consideration of a lesser fine. But normally just an undertaking on its own does not carry much weight. What can carry more weight is for you to say, okay, since you visited us and you are about to penalize us, but we have already started to address, or we have already addressed this deficiency for which you are about to fine us. Maybe that one, if you have already addressed it, because some people, what they do is when they have been visited, maybe before a fine letter comes through, they start addressing the issues. So if you show us that you have started addressing the issues, or you have actually addressed them, that will be strongly mitigatory. And in that case, if you have actually addressed it, sometimes consideration may be given to lessening the fine or reducing it to a warning, to a written warning at the end of the day. But it doesn't take away that the violation had already been committed.
Thank you, DG. We have a question from Abigail. I think we get this a lot. She's asking if there is any likelihood of a PEP list or register being shared by the FIU.
I'll keep the question open, really, of whether we will. In the past, the reason why we have not done it in the past is the definition of PEP is politically exposed person is very wide and fluid and is changing all the time as new appointments are made and others and it extends to a wide variety of entities, including parastatals, including the army, including the judges, including the top brass of the police force. So maintaining it is a big logistical, presents a big logistical hurdle. If it is going to be done to come up with such a list, it's unlikely to be done by the FIU because we feel it should be the responsibility of the institution itself, based on the definition of PEP, to identify which of their clients fall and meet that definition. Not many countries, in fact, there could be a handful of countries who have attempted coming up with a list, but it's not normally done by the FIU. Sometimes it can be a private sector initiative where some entity, in fact, I am aware of one entity that has been ambitious saying we want to compile that, but when I looked at what they come up with, it falls short of a comprehensive list. So the trying to come up with a list is really fraught with difficulties. The easier part is for the financial institution or DNFBP to understand what is the definition of a PEP and then try to establish on a customer by customer basis which of their customers are PEPs. What is easier is an list of international PEPs, because international PEP is a bit narrower. It is confined to heads of state and government and other similarly senior people, but it's not as wide as it is domestically. So we have quite a number of service providers the world over who have come up with a list of global PEPs or PEPs from foreign countries. So they'll know in Zimbabwe the head of state or government is so and so, the ministers are so and so. The list is much narrower. So for international PEPs or foreign PEPs, it's much easier. But for domestic PEPs, the definition is much wider. And we are not likely to come up with that. Yeah. But you may want to consider, if you want to come up with a mechanism as a private initiative, please, you can have our support, and then we can see if you can come up with something like that. But as a regulator, we want to be able to come through, if such a list, someone has come up with that list, to be able to check and supervise and say, no, this is not comprehensive, no, it has these weaknesses. But if we come up with the list ourselves, that will undermine our oversight and regulatory function.
Thank you, DG. I think we've run out of time, so we'll take our very last question. Then at the end, DG will allow you just to give us your closing remarks. So the very last question is coming from Moses. His question is as follows: how effective is your supervisory framework when about 60% of the Zimbabwean economy is in the hands of the informal sector, which is not bound by any regulatory requirements?
That's a very good observation. So yes, our supervisory framework is not as effective as it would be. So someone asked, what are the gaps identified in the NRA, which I said they will follow. But one of the key things coming out of the NRA is the effect of the informalization of the economy. It makes combating money laundering that much harder, and it's not totally a lost cause, because at some point that cash, the economy is largely informal and largely uses cash, which is not being used in the formal system. But at some point, we will see the cash coming in at some point from the informal economy in the purchase of a state, real estate, being laundered into the financial system. So at the stage at which it's not being laundered into the financial system, we are not likely to be able to detect it. But the main purpose of an anti-money laundering regime is to prevent illicitly acquired funds from being laundered into the economy and the financial system. So that is why we are really tightening things up with the real estate sector, where probably a lot of the cash illicit cash can easily be laundered. The real estate sector can, if they pull up their socks and start really tightening anti-money laundering measures, which they are doing, a lot of efforts are being done. Then even the informal sector will manifest, the transactions will manifest themselves somehow when those funds start getting to be invested in the formal economy. It will be picked at some point. But I agree with you, it's a little bit harder, but that is one thing that we have to keep in mind, that we are a cash economy. So which areas are we supposed to keep a closer eye on, where the cash is likely to manifest itself when it's being laundered? Then you then increase supervisory and enforcement activities in those areas.
Right, DG. I know I'd said that was our last question, but there's a follow-up question on PEPs. I think it would be fair for us to just cover this follow-up question on PEPs. It's from Onyas Chikorese. So he's saying, thank you, DG. On the PEP issue, do we have room to apply a risk-based approach on both classification and declassification, where the risk would have been reduced, for example, a case of divorce? So maybe also linked to that, the issue of foreign PEPs, and then the same category, domestic and international PEPs. Maybe if you can touch on that.
Yeah. What I can say is you have a in terms of identifying whether a person is a PEP or not, there's no leeway at all. So that one is mandatory. You have to identify whether a person is a PEP or not. Then, having identified whether a person is a PEP or not, for domestic PEPs, you now have a bit of leeway based on risk to say, okay, this is a PEP, this is the Director General of the Financial Intelligence Unit, he's a politically exposed person. What risk does he present? If I am a customer of a bank, for example, then they might see that all that is coming through in my transactions are my salaries. And that is happening over the last 5 years. They will then probably classify me as low risk in that category. But if I'm having other transactions that are coming through, I might then be classified, that they cannot immediately account for, I might then be classified as high risk, and then enhanced due diligence measures may need to be put in place. But I think your question is also touching on declassifying a person as a PEP, because for as long as he still meets the definition of a PEP, there is no, you don't disclassify, you simply put tired customer due diligence measures, simplified and lower measures where the risk is lower, and then enhanced measures where the risk is higher. Where a person is divorced, and if the spouse was classified, because the classification extends even to family members, spouses, and spouses no longer falling within the definition of PEP, yes, you can declassify because it no longer falls within that. But again, that normally has to be done with the risk-based approach, because it might turn out that even when a person has left political office, they may still be wielding some influence. Or if a person has ceased to fall within the strict definition, the extended definition of PEP, by way of maybe an associate or a spouse or a child of a PEP, you may still want to check the relationship on whether it's still not presenting that risk. Maybe there is still some influence that is being exerted. Maybe there is some illicit process that were acquired in the past that can still be laundered by that person. So again, the emphasis is on the risk-based approach, in my view. So the leeway is not in the classification itself, but in deciding which of those people that you have classified as PEP present lower risk and which ones present higher risk, and then treat them accordingly.
Great, DG. Looks like Onyas is happy with the response. He's just responded. Response is much appreciated, DG. And I think this is shared by everyone on the call. Thank you very much for your responses. And I'm also happy, DG, that the supervisors were on the call. And by end of this year, almost all of them would have issued sector-specific guidance. And from what we have seen, some of these issues that were coming through is going to be covered by those guidelines. So DG, thank you for answering all the questions that we had. I don't know if you have a few remarks before we close the session.
Thank you, Kuda. And I think by way of closing remarks, just to thank you all for having taken the time to attend this webinar. I was impressed by the numbers that I was told, again, over 750 participants. I think that is an indication of how far we have come. We are not yet there in terms of having gotten on top of combating money laundering, but if we get the engagement of every relevant stakeholder, you engage as you have done on this platform, then we are well on our way towards effectively managing our money laundering risks. So I want to thank you once again, and just to emphasize that we are going to be assessed starting 2026, and the assessors, they will come on the ground, and they may want to interview some of the stakeholders they choose. From the list, they can choose to say want to interview these 5 state agents to see the extent to which they implement anti-money laundering measures. So for those reasons that you may be chosen, we are really you are going to be seeing quite a lot of your supervisors, a lot of the FIU coming through with inspections, and where there are shortcomings with fines, with corrective orders, to make sure that come 2026, we have adequately prepared for the mutual evaluation. And our main goal, which will be a collective victory, is when we avoid being placed on the FATF grey list. So thank you once again.
Great. Thank you, DG, and thank you everyone for participating, the supervisors as well as reporting entities. So this webinar will be available on our YouTube channel as well as our website. Thank you very much. Have a good day.